After years of being isolated from the international community, the U.S., along with its negotiating partners, have reached a deal to prevent Iran from producing a nuclear weapon.
Because of this deal, Iran will not produce the highly enriched uranium and weapons-grade plutonium that form the raw materials necessary for a nuclear bomb.
The deal, important not just in terms of preventing nuclear proliferation, but also likely to have an impact on the global oil supply. Iran has the world's fourth largest proven oil reserves. Richard Mallinson is a geopolitical analyst at Energy Aspects. He joins us from London. Richard, what does this deal mean for the oil markets?
Well, I think this deal will mainly be significant in terms of long-term supplies. When you look at the detail of the deal, Iran is not going to get immediate relief from sanctions. We're only going to see US and EU sanctions starting to be lifted from early next year. But from that point onwards, Iran can start to increase its production and exports. And it certainly has big ambitions in terms of increasing its oil output and becoming a more significant exporter once again in the world market.
Now, we're seeing oil prices today move lower on the news. Is there a feeling that Iran will try and pump as much oil as possible? There are some reports out there saying that they could pump as much as 1 million barrels a day.
I definitely think that Iran will be looking to pump as much as it can once sanctions relief starts, but I disagree with the views that it can rapidly increase production and exports by as much as 1 million barrels a day. Firstly, as I say, sanctions relief isn't going to be immediate, and secondly, when you look at the state of Iran's upstream, it's been starved of foreign investment for a couple of decades really, and so it's going to take a long time to bring those fields back up and to increase production. It's not a case of more oil this year. We're looking at some more oil from about mid-2016, but a much longer time period for recovery by anything like 1 million barrels a day.
So much beyond 2016 to see us at 1 million barrels a day? Will it be 2017, 2018?
I think we're probably looking late 2017 at the earliest, and even then that depends on foreign companies feeling confident enough to return and invest in Iranian oil fields in a major way. And what you've got to remember is we've straight away seen the US Congress and Republican leadership make a very clear statement about their dissatisfaction with this deal, their desire to try and block it, and I think that will lead to some caution amongst some of those companies because in the end the sanctions that affect them are controlled by Congress. The President can only offer temporary relief, and if Congress is unwilling to lift those sanctions permanently, major investments in Iran will still look a little bit risky.
Now, obviously, there could be some opposition there in the U.S. Congress, but what is Iran's relationship with the rest of the OPEC countries?
Well, I think there are a number of challenges there as well. Iran has been making some very firm statements that it expects, when it's able to increase production, other OPEC members like Saudi Arabia and Iraq to make way for it in the oil market, i.e. to reduce their production in order to allow Iran to increase its exports. But there's very little sign of the Saudis, the Gulf Cooperation Council states, or even Iraq being willing to reduce that. In fact, both Saudi Arabia and Iraq have been really ramping up their production in recent months. So as Iranian production does start to return, I think we could see a lot of competition for market share, particularly in the Asian markets, where all of these Middle Eastern OPEC producers are trying to send their exports.
Is there a big fear, perhaps, not only among Saudi Arabia, but other OPEC nations, that there could be a glut of oil in 2017?
Well, I think when we look at the short term, the market is significantly oversupplied. That's why prices fell late last year at the beginning of this year. What OPEC is hoping is this period of lower prices is going to impact high-cost non-OPEC production. So that's US tight oil, things like Canadian oil sands, deep water projects around the world, Russian production. OPEC members are hoping that if they can survive a period of lower prices now, those high-cost producers are going to be forced into reducing their spending, reducing their output later in the decade, and demand growth will also be stronger. So actually, if that plays out the way OPEC hopes, there may be enough demand around to absorb more Iranian oil, even with high levels of production from OPEC members. But at the moment, it's too early to be certain whether that strategy is going to work or not. We've yet to see the production declines really coming through. The first place we should see it is in the US, but even there the data isn't conclusive yet.
And of course concerns about oil producers here in the US perhaps fueling some of those concerns in the US Congress. Thanks, Richard. That was Richard Mallinson of Energy Aspects joining us from London. In New York, I'm Ruben Ramirez and you're watching The Street.